So, hello everybody. Thanks again for inviting me. Jan, when we talked about this event, you told me that you've put the video of my presentation of the this year's summit in Berlin online, and you gave me one recommendation on this. You said it was okay, but it was too much movement in your presentation. So I'll try to be a bit more centered on this right now. Otherwise, it might be difficult for the colleagues of the media. My name is Keussen. As you mentioned, I'm working for EON. I'm responsible for the team we call Technology and Innovation. And what I want to announce here is a bit what we're doing, and especially what we're doing in the area of venture capital. So first is, we are active as EON in a number of activities which are not what we call a business case yet. So we work a lot on future developments in a broad range of segments. So it starts from smart city approaches, where we have a specific project going on in Sweden. We talk about new setups, capex savings for offshore wind technologies. For instance, just as an example here, floating foundations for offshore wind farms. We are working on future power storage technologies. One of the things we're doing right now is building a demonstration plant with 2 megawatt on a power-to-gas storage device. Power-to-gas means we take exceeding renewable energy, convert it into hydrogen, and what we do compared to others is we take the hydrogen and feed it directly into the gas pipeline system, and by this store the electricity. The number I like here most is that the amount is huge, so you can store in the existing German natural gas pipeline system about 15,000 megawatt offshore wind for 1 year. So the potential is really, really huge. And finally, we're looking into, as a fourth example, smart regions. There's an island in the north of Germany called Pellworm, where we try to combine generation, renewable generation, storage, demand control, to have a kind of flexible, smart region there. So just examples, so EON is not just generating power, importing gas and selling it as a commodity, but we are working on a number of activities, and this is just some of the examples. We do this because we strongly believe that times will change and are already changing, driven by certain trends. This is not kind of rocket science, not really new for you, but we believe that a combination of a demographic change, new technologies, information technologies, new developments, for instance, in the area of photovoltaics, the demand for sustainable development of companies, and certain individual customer trends like individualization significantly drives the changes in the energy sector as well. And that's why we kind of work on preparation for a much more decentralized energy setup, much more customer-centric, and much more flexible compared to the setup we have today. So this is just, in a few minutes, the introduction on why we work on certain things. And one of the things we do is now, beyond pilot projects, beyond supporting academics, beyond running projects with our business units, we decided to start activities with startup companies. The reason is that we believe that a lot of innovation comes from startup companies, partly technology-wise, but especially on business models as well. And we strongly believe that this can tremendously help us to innovate in our segment, and that's why we work on this, that's why we are here and do present. One of the things we do beyond the startups is that we created kind of internal startup, you can call it like this. So we created an own business entity called EON Connecting Energies. This is an EON unit dedicated to do decentralized distributed energy businesses. It's not about pilots, demos. All they do is really to create a return and EBIT. So this is kind of one of the activities we did to start this internal kind of startup company. But this is not enough. What we do is, as I just mentioned, we've started what we call strategic co-investment. Why do we call it strategic co-investment? It's not that we just want to run kind of a venture capital activity, which is maybe mainly driven by financial KPIs. Our intention is to get in touch with startup companies, to take a minority share in equity, and this is important, and that's why we call it strategic co-investment. We look for companies where we can bring the products to the market as a pilot, as a demonstration, or finally, hopefully, of course, as a rollout product. And this is, and I'll come back to what I just learned in the presentation of you, Alois, this morning, is it's not that difficult to work with utilities because we have one unique differentiator when it comes to your products you want to offer is we have the market. E.ON has 26 million customers in Europe. We have pilot sites. We can kind of on short notice offer pilot sites with our customers in our asset base to deliver your product to our energy customers and energy markets. And this is something, sorry to say that, a venture capital fund cannot offer. And that's maybe finally a combination of the two of us is the most interesting combination for a startup company. But it's just to emphasize, this is what we're looking for. Companies which are interesting for us, which have an interesting product we can bring to the market, and by this create a win-win situation. We increase the value of your company, we participate as an equity shareholder, we have an innovative product for our customers, and you have a market for your ideas and you can develop your product further. So this is the basic idea of what we're doing. What are we looking at? And this is here on the slide. As I mentioned, it's a minority share. Important to stress as well, if you compare a utility like E.ON with a GE Venture or Siemens others, we do not have the interest to get access to your IP, and we do not want to kind of take over your company. So it means for those who just want to establish a company to be taken over as soon as possible, this is bad news. But for those entrepreneurs really want to build something, grow your company, and kind of build a business where maybe your kids are proud of as well, I think it's an interesting approach, interesting combination, because we are not a technology developer, we are an operator of assets, and we want to kind of combine systems and bring it to our customers. So we are not the potential takeover, but we are the partner to bring your products to the markets. The areas we're looking are mentioned on the right-hand side of the slide. It's, as I mentioned, distributed energy generation, it's energy storage, so the whole range on things we're looking at. Customer engagement, data is an important issue for us. We look at solutions for the grid, smart grid solutions, and of course we look for everything related to renewable energy. So those are our key areas we look at. Geographical focus, it's a bit related to our E.ON activities. It's Europe, it's US. On top of this, we are now entering into markets in South America, so Brazil. There are some rumors in the news on potential entrance into the Turkish market, and we are engaged in Russia today, so those are our areas where we could bring your products to our customers and markets. As I mentioned, we've started the activities, we have done our first investment, we have some cooperations with US venture capital funds. We are about to set up a team doing this. One of the team members is here, and he will be in the presentation. It's Jona Hampe. Maybe you can shortly stand up. You just have to look for the tallest guy in the room, then you'll find Jona. So whenever there are specific questions, you can contact him over the whole session here. And as I mentioned, we are about to set this up, still some processes to be defined. Money is available. We have recently set up now an office in San Francisco as well. So we are moving ahead. Happy to get in touch with you, get your ideas, either from the startup companies here in the room, or of course from partners being potential kind of co-investors in some activities. So this in short is where we are. Happy to take your questions, comments right now or later on. Thank you very much for listening.
Urban, can you tell us which investment you made and who are the VCs in the US that you are more closely connected to already?
So the investment we did is a fuel cell company in the US called Bloom Energy. Some of you may know it. They produce a fuel cell for industrial commercial customers, which operates at an efficiency above 60%. There are a number of potential investments in the pipeline right now. The venture capital funds we work with, one is Kleiner Perkins. The other one, we are in kind of final negotiations, so we can announce it potentially next time then.
Okay. Do you have a question, Taya? Yes, please.
Hi, thank you for the presentation. I have a question. It's a very interesting approach that you described, but when you look at sort of corporate venturing programs of utilities, energy utilities or others, and the open innovation platforms that exist. We work with startups, we're an early stage clean tech fund. And so we have, with our portfolio companies, we have worked with several of the corporate venturing programs of different utilities and others. And the key bottleneck, what it seems to be for us, it seems to be that oftentimes the corporate venturing unit, they need to convince the business units to take on that particular venture's service or technology and application and really roll it out. And that's where the buck stops. The business units, they're very busy with their everyday activities and they don't necessarily always share the view of the corporate venturing unit. And this is where things slow down. I mean, there's success cases as well, but I would say that 75–80% of the cases, that's when things slow down. And on the sort of startup venture side, where the time is very much money and things need to process fast. And I think this is where Alois was referring to as well. That's where the biggest challenge is. So in EON's case, how do you plan on solving this issue?
Yeah, thank you very much for the question. It's a very valid point. And I do not claim that we are really perfect on this as EON, but I explain in a few words how our setup is, why I believe we have the right structure to overcome this potential barrier. So first, on the technology innovation part I'm heading. First is what we did, we created one budget group-wide. And from this budget, we pay all the activities which do not have a kind of full rollout yet. Means if we engage with a startup company, we want to do a demo somewhere, which is not really full out, it's part of my budget. And if I go to my business unit, say we want to do a demo here, I pay the business unit for doing this. So I do not impact their P&L. I have no budget discussions with my business units. Second, what I have, of course, is I need some resources from them. So the more interested the business is in it, the easier. This is what we call the pull mode. Sometimes, as you mentioned, we have to convince them. This is what we call the push mode. So this is partly my role to do this. This is not always an easy thing, but we manage to do it. And one of the setups we've chosen is, of course, sometimes you need some top-down approach. And so it's partly my role to do this, but my boss is the EON Group board member, so it's not somewhere in the organization, but I can easily then ask my boss as a board member to say, please contact this or that, so that once we have to switch to push mode, we have quite some activities there. So budget is not an issue as long as we're not in full rollout. And the engagement, I think we have quite some good experience. But it's one of the challenges, you're fully right.
Guido Lütsch from NTS. So what stage do the companies to have been in to be interesting for you? Because we made a due diligence 1 year ago with EON, and at that time EON was not sure if, or they had, I had the impression that EON at that time has no idea where to go on with startup and early stage companies. Did that change, or what is the stage the companies have to be in, and at what time will you invest?
Yeah, so you're right, definitely that happened a lot over the last 12 months. And 12 months ago, I'm not fully aware of this specific case, but I can I share your view that we were not clear what to do, and it's not a surprise to me that we didn't kind of proceed as expected. So the whole strategy I just announced here has been worked out over the last mainly 6 months. So we are in a different stage right now. As I mentioned, it's not that all processes are already in place, but we are about to hire people. The strategic decision has been taken, the board decision, all the whole stuff has been taken, so we are much clearer now. On the companies we're looking at, as I mentioned, of course, companies having a product which could be tested as a pilot, let me say, within the next 2 years, are easier for us to argue when we go to this strategic co-investment. So in that sense, you would say it's maybe more kind of late stage approach we are looking at, which doesn't mean that we kind of fully exclude earlier investments. And coming back to your point, of course, our priority is to look for companies where we can bring the product directly or in reasonable time to the market, but we are open as well, and this is part of our strategy, to invest in a company where we right now do not have a business unit saying, yes, we want to take this product. If we from our organization as Technology Innovation are convinced this is something we need for the future, we are ready to invest, kind of park this for a year maybe, and then come back to the business and say, now it's time to go. So the focus is on later stage, but this doesn't fully exclude the very early stage investments.
And it is very important to start a relationship and maintain it over time, because these deals are not made within 3 months. I think this relationship between the startup and the investor has to grow, right? So one more question. We have lots of cool people from the Netherlands.
Yeah, I'm Christian Rood with Tech Institute ECN. And my question is regarding a little bit more the interplay between VCs and yourselves. As Alois mentioned, the exit is very important, and the exit potential at the beginning is evident. How do you see the potential conflict between yourselves and willing to distribute the product and the exit potential?
I do not see a real conflict there. So maybe to elaborate a bit on how we cooperate, at least as of today, with venture capital funds is, first is, I learned that the venture capital arena is very open to each other, so they share information because they're interested to share risk and with this co-invest. And what I learned, what venture capital funds and startup companies are interested in is the following things. First is, EON has quite some capabilities to evaluate and judge on certain technologies and products. Second is, the European market is one of the most interesting markets for energy products because we are, in most areas, much more advanced than the US or the Asian market. Third is, the US companies do not understand the European market. They have a fully regulated market, so they do not understand what unbundling means. They do not understand what all the political regimes mean. So they're simply, it's a bit black and white. Sorry for maybe being black and white on this. So they do not fully understand the European market. And having EON, as I mentioned, access to 26 million customers in 11 European countries, we can really add value to the venture capital funds as well. And at least up to now, I haven't seen any kind of competition between the venture capital funds and us. It's the other way around. They are very eager to work with us. And on the exit strategy, as you mentioned, I think our interest is to learn from the startup companies, to have innovative products. And if we finally get some financial returns on this, fine. But in my view, this is just the add-on. This is not our key driver. The key driver is to get the products, to get access to technology and business models, and not to have the KPI financial returns. This differs us from the venture capital funds.